Hi there, welcome to Grain TV. It's Tuesday, May 31st, and it was a down day in grains. Let's take a look at the grain edge trading platform and see where we closed. In Chicago, wheat was the leader to the downside, giving up 15.5 cents a bushel. Beans off 8 and corn off 7 3/4. News today, we started with some good export sales. For soybeans, 73,000 of old crop and 140,000 of new crop, but that could do little to stem the tide of selling that we saw throughout much of the trade session today. Kansas's wheat crop is going to be probably bumper large, and the Kansas Grain and Feed Association is saying that they may see a 400 million bushel wheat crop in Kansas versus USDA's estimate of only 353. So those rains that hit right at the critical growing time are really having a benefit, and expecting, many people are starting to expect a very, very large wheat crop. Other news, the US dollar was up as well today, gaining 0.3%. Not a big move, but we have been on an upward trajectory in the last few weeks, and especially as expectations are rising that we will see a Fed rate hike maybe in June or even later in the summer. And right now, all eyes will be on the jobs report later at the end of this week to suggest whether we will in fact see a strong jobs report and potentially get a rate hike from the Fed. In export news, weekly export inspections came out today because of Monday's holiday, and in that data we saw a pretty mixed bag, with wheat coming in on the strong side at the very tail end of the marketing year, with 495,000 metric tons shipped versus 250 to 400,000 metric tons. Keep in mind, this is the tail end of the wheat marketing year. We only have a few days left for reporting in the export category. So in all likelihood, we're going to fall short of USDA's projections. In corn, the numbers came in a little disappointing, 786,000, below the 1 billion mark. That was the lower end of trade expectations. And soybeans coming in right in line at 182. When we look at the scorecard for the year, how are we stacking up year to date in terms of export inspections versus what USDA has pegged on the annual supply and demand sheet? You can see again, wheat, we're right at the end of the marketing year. We're 11.3% off last year's pace, and USDA is only looking for about an 8.7% decline year on year in exports. So that is likely going to increase the carry out of old crop, probably in the tune of 40 to 50 million bushels from this year into next year, over what USDA already has. Corn and soybeans are faring a little better. Soybeans in particular improved this week. Corn kept about flat, with exports coming in about where they normally are this time of year. So overall, wheat is just really starting to underperform. When we look at wheat, one of the things that's critical is how competitive we are in the world market. And when we look at our export prices for the US versus our competitors, in purple here we have the Ukraine, in green we have France, and in orange we have the US. And you can see in particular for the last 3 or so months we've been trading at a $30 a metric ton premium in the US versus France. Now that premium has grown even wider here in the last few days before today's sharp sell-off. As of Friday, we were at a $36 a metric ton premium. Part of that is due to the strength in the US dollar. Now go back a year ago at the front part of this chart, and you can see our premiums were much less pronounced compared to the rest of the world here. In general, we were trading about a $10 a metric ton premium, and in some cases we were on par with France and the Ukraine. And so the fact that we have been trading at $30 premiums for a good long time period is really detrimental to our export situation. And as we get into our harvest season, it makes you wonder if our market for wheat just really needs to move sharply lower to start to garner any sort of serious export business, because in the last year it was a 40-year low for exports, and we've got to wonder how long can we keep our prices at these lofty levels compared to our competitors. Turning to other issues, when we look at the weather outlook, it continues to look particularly wet in southern Texas, or in most of the central part of Texas, for the coming 7-day period, with 5 inches of rain expected. Nice dryness in the central plains, which will help as we reach the maturity of the crop. And in particular, as we look at the Corn Belt, and it looks like pretty lofty or pretty regular rain intervals occurring over the growing season. So overall, there's nothing really alarming here to get this market to continue to the upside. And if the dollar keeps moving higher, that could spell problems. We saw crude oil off today. We saw silver off today. We saw a lot of commodities pressured as the dollar continues to ratchet higher, and you got to wonder if grains may be the next in line to fall, if we don't see any sort of serious weather problems in the coming months, which right now doesn't seem to be the case. If you have any questions about marketing your grain or in trading in the futures and options market, by all means, visit us online at grainhedge.com to learn how we can help you in your own grain marketing situation. As a GrainEdge trading client, you'll get our technical alerts email first thing every trading day. Technical alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by technical alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.